All right, let's talk about sustainable finance. It's this huge field that promises to, well, reshape our world. But let's be honest, it's also a source of massive confusion, right? And that confusion, it really starts with the most basic question you can ask. What is sustainable finance? I mean, why is it so hard to get a straight answer? If you've ever felt like all these terms, green, social, climate, ESG, are just being tossed into a blender and mixed up, well, you are definitely not alone. And you know what? It turns out that feeling is completely validated by the academics themselves. This quote, man, it just gets right to the heart of the problem. What researchers are saying is that pretty much everyone, we're talking international organizations, big financial institutions, you name it, they all tend to cook up their own definitions to suit their own goals. And the result? It's just this messy, confusing landscape of terms that aren't the same thing at all, even though we often act like they are.
So, okay, how do we possibly cut through all that noise? Well, that is exactly what we're going to do today. We're going to break down this really fascinating paper that thankfully does all the hard work for us. It's what's called a systematic review. They looked at 80 different academic studies published over this really crucial 10-year period from 2011 to 2021 to figure out, what do we actually know?
And this chart just shows you perfectly why a review like this is so timely. I mean, look at that. We're seeing an absolute explosion of interest. For the first 7 years they looked at, you're getting maybe, 2 or 3 papers a year on the topic? But fast forward to 2021, and that number has just skyrocketed to 31. The academic world is clearly paying a ton of attention now, which makes a summary like this absolutely essential. So where is all this research actually coming from? Well, almost 60%, 59.7% to be exact, of the studies they looked at came out of Europe. And the paper suggests this is no accident. It's almost certainly being driven by some really strong political will over there. Things like the European Green Deal, which has basically shoved sustainable finance right to the very top of the policy agenda. Okay, so we've got all this research happening, mainly in Europe, but what are they actually studying? Where's the focus? Well, the paper does a great job of boiling down this whole decade of work into 4 main themes, or pillars, of study. Let's break them down. Think of this as our roadmap for the next few minutes. The 4 key areas that researchers have been, frankly, obsessed with are, number 1, a really big shift in how we even think about value. 2, the nuts and bolts of green bonds. 3, let's call it the messy world of ESG ratings and performance. And finally, number 4, how the role of banks is changing and the new kinds of financial risks they're dealing with. All right, let's dive into that first pillar. And right away, we're looking at a huge philosophical battle. The main idea is this move away from the old school playbook of just maximize shareholder wealth at all costs. The new goal is what they call a sustainable value creation model, which is supposed to consider a much wider range of people and impacts. But, and this is a big but, the research also points out a pretty cynical counterargument that sometimes all this sustainable finance talk is really just a PR tool, not a real change in how companies do business. Okay, pillar number 2. Green bonds. And one of the coolest concepts that gets studied a ton here is something called the greenium. I love that term. So what is it? Essentially, it's the slightly lower return an investor is willing to accept on a green bond compared to a normal bond with the exact same risk profile. That little difference? That's the premium they're willing to pay to know their money is having a positive impact. And for the company issuing the bond, that can mean cheaper financing, which is a huge deal. Now for pillar 3, and honestly, this is a big one. It's what the paper calls the ESG rating puzzle. What the review found was, that the major rating agencies just do not agree, at all. It is totally possible for the exact same company to get a fantastic ESG score from one agency and a terrible one from another. And this huge lack of agreement, as you can imagine, causes so much confusion and really, really undermines the credibility of the whole system. And that brings us to the 4th pillar, the changing role of banking. The research shows this really clear shift happening. Banks are moving away from just, avoiding so-called sin stocks. Now they're actively looking for opportunities in green projects. And that means banks aren't just neutral middlemen anymore. No way. They're on the front lines, having to manage totally new kinds of climate-related financial risks, often with a nudge from central banks who are trying to steer the whole system toward more green finance. So, okay, we've gone through a decade of explosive research across these 4 big areas. So what's the bottom line? What's the big takeaway from all of this? Well, the paper's final conclusion is kind of a sobering reality check. Here it is. The paper's conclusion is that the literature on sustainable finance is extremely fragmented. I mean, think about that. Despite that explosion in research we saw, the field still doesn't have a unified theory or single framework or even just a clear, shared idea of what it is and how it's supposed to work. That chaos we talked about at the very beginning, yeah, it's still right there in the middle of the academic consensus.
And this next point, this is probably the toughest pill to swallow, especially for professionals in the field. The review concludes that after all this time and all this research, there is still no substantial, consistent evidence that portfolios that screen for ESG factors actually perform any better than traditional ones. This just flies in the face of a huge marketing narrative we've all heard, right? It really highlights this massive gap between what we think is happening and what the financial data, at least from this decade, actually proves.
But look, it's not all doom and gloom. The paper doesn't just drop these problems on our lap and walk away. It actually gives us a path forward. It lays out a really clear agenda for what researchers should focus on next, the key questions we have to answer if we're ever going to bring some real clarity and rigor to this field.
So, what's on that to-do list? What are the next big frontiers? Well, for starters, researchers need to figure out how to tackle this data chaos, maybe with AI. They need to really rigorously test how all the sustainability stuff actually impacts a company's cash flow. We need to better understand the role of government policy in building a solid system. And the big one, I think, is moving beyond just reporting and finally figuring out how to bake ESG factors right into the core business models of the financial world.
And all of this really leaves us with the one ultimate question that this entire decade of research seems to be wrestling with. Is sustainable finance actually becoming the powerful tool for real-world change that we all hope it can be? Or is it still just kind of stuck, as some of the research suggests, as a really big, really expensive public relations exercise? Honestly, the answer to that question is what the next decade of research is going to have to figure out.